Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Asia podcast. I'm Doug Krisner. You can join Brian Curtis and myself for the stories making news and moving markets in the APAC region. You can subscribe to the show anywhere you get your podcast and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.
Well, joining us now to take a look at market action and what to expect going forward is Stephanie Leung, CIO at StashAway, with us in our studios here in Hong Kong. Stephanie, thanks very much for being in. So a lot of investors are saying it's all about Nvidia this week. But we should note that the rally in risk assets has seen a broadening to not only industrials, but financials, other value and cyclical stocks. Also emerging markets, foreign currencies have rallied as well. So to what extent do you see this as bigger than Mag 7, bigger than AI, and bigger than Nvidia? Or is it really all about Nvidia?
Yeah, actually, I mean, a lot of action, obviously, in Nvidia and the AI-related themes. I mean, most recently, we've seen actually the AI theme broadening itself as well to power companies or kind of infrastructure plays. If you think about kind of AI usage and compare that with kind of traditional search, every AI query actually uses 10 times more energy than a Google search. So that explains why investors are getting actually quite excited about energy in general and power plays and data center uses. I think also if you think about kind of the broader economy, I think about 2 months ago, we pointed out that we're seeing some green shoots in terms of the global manufacturing sector. And when you look at global manufacturing PMIs or US PMIs, they have been actually slumping for the last 12 to 18 months, which has actually made a turn in the last 2 months. So I think that in combination with more supportive policies out of China, that prompts actually a larger kind of recovery in risky assets. And when there's more things to choose from, it's not just the Mag 7 anymore, right? You can actually invest in the broader market, including industrials, including even utilities. I mean, that actually broadens up the market.
We heard today from the head of the Cleveland Fed, Loretta Mester, saying that maybe we don't get the 3 rate cuts projected in the month of June when the Fed conducted the last dot plot survey. I'm wondering what that does to your thesis on the market. Let's say we don't get any rate cuts this year from the Fed. I know that may be away from the consensus viewpoint, but there's a lot to be said for the robust nature of the American economy. Inflation, yes, it appears to be a little stubborn. Maybe the Fed doesn't cut rates between now and the end of the year. How does that change the way you're viewing opportunities?
Yeah, I think at the beginning of the year, when the market was actually pricing 5 to 6 cuts, I mean, we were saying that that was like way too aggressive, and we don't see inflation coming down as quickly as it did in the last kind of 6 to 9 months. And in the first quarter, indeed, what we've seen is still disinflation, but the pace of that disinflation has disappointed markets. Now the market is sort of pricing in 1 to 2 cuts by the end of the year. And I think we've seen some walkbacks from Fed officials as well to the 3 cuts forecast. Now, when we take a step back, we still think that there will be disinflation kind of going on in the next 6 months or so. However, I mean, that pace is actually going to be more gradual. And when you think about kind of how the Fed thinks about the setting of interest rates, right now the real rates is actually above 2%, which is actually quite tight. And they have actually said that they think real rates are actually quite tight. That gives them some room to cut. I mean, whether it's 1 times, 2 times, or even 3 times, I think it's just a matter of kind of, I guess, 25 basis points difference. But the direction is there, right? The direction is that they will start to cut at some point in the second half of this year.
So inflation was a concern that was very much front and center. It seems like it has slipped a little bit to the backseat, not as far back as things like geopolitics, debt, and deficits. These are the things that Jamie Dimon, commented on, and he's very nervous and he's prone to look at these big picture themes. But what happens in markets is they don't always focus on those big picture areas on a day-to-day basis. And so I'm curious whether or not, inflation is kind of sliding into that position where, yeah, it's out there, it's something to be concerned about, but it may not affect markets in the very short term.
Yeah, I think, the concern for us, for inflation really is that where does long-term inflation land? does it actually ever go back to the Fed's 2% target? Now, we talked about AI, for example. I mean, AI actually is very, very power consumptive or very, very power hungry. And when you look at, for example, the latest kind of iteration of chips from Nvidia, it actually uses even more power than the previous generations. So, I mean, that actually puts some upward pressure on commodity prices. We're seeing breakouts in copper. We're seeing breakouts in gold. I mean, that also reflects, I think, the market's concern about the U.S. dollar. And when we think about commodities, I mean, these are priced in U.S. dollars. So I think in combination, we're actually more concerned about the long-term inflation outlook of settling somewhere between 2 to 3% rather than the Fed's 2% target. So that actually has a lot of implication for long-duration bonds. I think that is actually the bigger, longer-term concern.
I'm glad you mentioned U.S. dollar strength, because the flip side is obviously a weak currency for many of the exporting nations in the APAC region. I was looking at data today from the Port of Los Angeles. We had trade volumes, total volumes, up for a ninth straight month during the month of April. And then if you look at import volumes, these are containers that are fully stacked, up 21% in the month of April versus last year. So I guess there may be a case that weaker currencies in some of the exporting nations in Asia is really helping to drive trade right now.
Yeah, for sure. If you look at how the Japanese yen has been fueling the Japan economy recovery, I think a lot of nations are thinking about their own currencies. And China in particular is suffering from a cyclical downturn. And exports have been very, very weak, right? And I think that is one of the easy levers that they can pull to trigger a recovery in the Chinese economy. Of course, they're pulling out all the stops in the latest Politburo meeting. They actually announced that they will try to support the property sector. They've just issued a $1 trillion special bond for the government, and there's a lot of speculation on how they would use that to prop up the property sector as well.
But a rally of 30% off the lows, that's a very big rally. I mean, how much is already in?
Yeah, so if you look at kind of China equity market from a fundamentals and valuation point of view, let's take valuations, right? Historically, its average PE has been around 0.5 times. Right now, it's sort of 10.5, so roughly 10 to 15% upside from there. Yeah, from a valuation perspective.
All right, Stephanie Leung, CIO at StashAway. We've seen a broad advance in risk assets really globally over the past month or so after weakness in April. But can that rally continue? We're joined now by Jun Bei Liu, who's portfolio manager at Tribeca Investment Partners. Jun, thanks very much for being with us. A very simple question to you. Can the broader markets rally if Nvidia disappoints?
Thank you for having me. Look, we do believe so. If Nvidia disappoints, it will probably put more pressure on the more expensive part of the market, which is the tech and the growth companies. But we do think heading into the year end, there will be many other companies, sectors, such as the cyclical part of the market, should start to do a little bit better, given the amount of underperformance they have done. So, our view is the market is going to continue to trend higher.
How are you feeling about the Chinese markets? Is that an area that will continue to trend higher as well?
I do think so. I think when we come to the cyclical part or the valuation differential between different sectors, the valuation differential between different markets has been incredible, particularly the Chinese market. The valuation that's present in many of its growth companies or even other cyclical businesses, it's just incredible when comparing to the developed markets. I do think that market will continue to outperform, and particularly at the expense of some of the more defensive market within that whole Asian Pacific region.
Sometimes geopolitics really rises to the fore, particularly when the U.S. and China are going at it over, for instance, trade. Now we have a possible inflection point with Lai Ching-te being inaugurated as president and making a speech where he didn't really say anything all that new in terms of the basic framework, the way that they look at things in Taiwan, which is we already have de facto independence. We don't need to declare it. Treat us as an equal. But China didn't like that, hearing it this time around. Why?
Look, I do think at this point with geopolitics, China is wanting to make a stance. Although I think realistically, China do prefer the status quo, as you said, whatever they've been promising before as the way it is. I think at this point, it's perhaps just making a stance. But I would very much think it's about status quo being maintained.
Jun Bei, what are your clients most concerned about these days? Is it geopolitics? Is it the fact that inflation still remains stubbornly high in many markets? Is the fact that maybe we don't know that the Fed is going to lower interest rates this year at all? What are they concerned about?
Look, I think it's a really good question. I think they're concerned a bit about everything at the moment. Seems to be having a lot of uncertainty. Look, I think inflation and interest rate is a big one. Clearly, in the last couple of years, has really deterred a lot of returns across many asset classes. Inflation is falling, but not fast enough. Our view is that interest rate will fall, but it's perhaps not going to be this year, and that is a little bit disappointing to many of the clients. Hence, that they are, we are seeing a little bit of volatility at this point. But our advice to clients is really taking a step back. Interest rate is going to head lower, maybe not this year, but it will be next year. And with that kind of stable outlook and corporates kind of holding up okay in terms of earnings, and the economy is holding up all right. I do think that that pace put a pretty good path for a pretty good return for the equity market at this point.
It's funny how you look at these things because interest rates are very low in Japan and China, and they don't have all that much growth. And interest rates are very high in the United States, and they have a lot of growth at the moment. How do you sort of put that all into the mix?
That's right. It is. Look, I absolutely. As a global investor, it is a little bit harder at the moment. That's why I think the Chinese markets, it does look very interesting because we're looking at the projected growth. So hopefully the projected growth will come back from its very, very low level that's been rebased significantly lower. We think heading forward next 12 months, the growth will be there and they will be higher than what is expected out of the US. Now, the AI thematic is very different. I think, US has a really fantastic head start in many of the sectors, many of its, chip makers and things. And I do think that at some point, the Asian markets will catch up. But just as a market itself, I do think the valuation will support, the markets that sort of underperformed in the last 12 months.
Let's do a little bit of walkabout economics, so to speak. How are things in Australia these days, particularly on the East Coast?
Look, the economy is actually holding up well, but we are certainly seeing that consumer slowing down very quickly, particularly in the last couple of months. We have heard from major retailers across every industry talking about slowdown and trading down by the consumer. Australia, in fact, if you take out the population growth, our consumer has been in consumer recession for quite some time. That is really just a result of a variable interest rate, variable home loan interest rate that is really being impacted, the consumer. So we're hoping the budget, which has been very stimulatory, and then we have the rate cut, the tax cut that's coming through by July this year. So we do think that these measures will help consumer to offset its weakness and its tough environment.
Let me ask you really briefly, flip side of the first question. If Nvidia does produce really big numbers, can we rally a lot from here?
Oh, absolutely. I do think share markets got heading higher, and if it's good result, it's heading even higher.
Yeah, okay. Jun Bei Liu joining us, portfolio manager at Tribeca Investment Partners.
Our guest is Ariel Cohen. Ariel is senior fellow at the Atlantic Council on the death of the Iranian president. Ariel, it's a pleasure to have you on the program, and we always benefit from your analysis here. Is this going to change anything inside Iran, do you think?
Not much. I mean, it may precipitate the transition. I'm watching like a hawk what's happening with Mojtaba Khamenei, the son of the Supreme Leader. The Supreme Leader is positioning his boy to succeed him. Surprise, surprise. So it's going to be a Shia North Korea. His son is not a distinguished scholar, and of course Iran is what is called the Republic of a Scholar, or Velayat al-Faqih, as they call it, the state of scholarly leadership. The first Ayatollah and the current Ayatollah, were not the most distinguished scholars, but they were very capable politicians. Clearly, the current Ayatollah is 85 years old, and the death of Raisi, President Raisi, comes at an opportune moment in this succession. Now, at the same time, the Islamic Revolutionary Guard, IRGC, are thinking about the future of Iran without these clerics, basically as a security services dictatorship. So lack of popularity of these leaders may play into the hands of the IRGC generals, who are, my sources are telling me, are thinking about taking over.
It's interesting because we often hear that there is a large civil society inside Iran with elites, with well-educated people who may not be in complete agreement with the path that that you've seen from the Islamic leaders. I'm just curious your thoughts on that. I mean, it's not like they're out there every day in the streets or anything, but how strong is civil society there, and could you see a change brought forward by them?
First of all, the civil society was very strong. In 2009, there was a Green Revolution. They voted a couple of times not in accordance to what the Ayatollah wanted. This is how President Khatami and President Rouhani were elected. They are of that regime, but they were of the more reformist wing of that regime. I spent some time speaking with President Rouhani after he retired, and he was a very impressive man. Now, currently, the crackdown is very strong. There were riots in 2022. Unfortunately, both in 2009 and 2022, the Obama administration and the Biden administration, respectively, did not go out of their way to support these popular uprisings, and they were quashed by the regime. In the future, if the regime is in crisis and different factions are fighting, civil society may play a major role, but they're not armed and they're not very well organized, and unfortunately, they do not have a lot of support, as demonstrated now by expression of regret with the demise of the president, who was known as the hangman of Iran. He personally was responsible for hanging of 5,000 people.
Ariel, presumably we'll have elections in Iran within 50 days. Would you trust the results?
Absolutely not. These are carefully choreographed elections. They are managed, stage managed by the supreme leader. Even people as pious and as much of the regime as the former presidents Rouhani and Ahmadinejad. You remember, Ahmadinejad was not a sweetheart. But they are barred from running in these elections. These elections are anything but democratic.
What about in Saudi Arabia? Because the King Salman, is being treated for lung inflammation. I don't know the exact status, but he's elderly. He's 88 years old. Will that succession there be rather smooth, or could it be turbulent?
Again, in these autocracies, from Moscow to Tehran to Riyadh, everything is very opaque. We do not know what is the extent of opposition and resistance to the Crown Prince, Mohammed bin Salman, who is actually running the affairs in Saudi Arabia now for years. King Salman is ailing for many years, not always in full control of his capacities, of his abilities, and his demise will enthrone, literally, his son, who is in charge now, MBS, Mohammed bin Salman. However, that may be a point where those princes who were sidelined by him or those prominent Saudis who were detained in a five-star hotel, if you remember, until they pay up the taxes or share in their wealth with the Treasury. They may muster an opposition. There were some reports of an attempted assassination. I don't know how reliable these reports were, but in a country with a tradition of assassinations, like King Fahd back in the day, and yet then another king before Fahd, there is a tradition, unfortunately, in Saudi Arabia to assassinate undesirable kings. If I were MBS, I would be investing very, very hard and watching my security very carefully. And I'm sure he has the money for the best security consultants in the world.
He was scheduled to be in Japan this week, but he canceled that visit because of the situation with the king. Ariel, very quickly here, in about 30 seconds or so, if the Trump administration comes back into power, or let me just say it in another way, if Donald Trump is reelected, how do the situations in Iran and Saudi Arabia, how are they affected?
If we are to judge Trump by his performance in his first term, he will get closer to Saudi Arabia. He will probably back Israel up more than the current administration, and he will be more prickly vis-a-vis Iran. Iran is very close to getting a nuclear weapon, or at least to enrich uranium to 90%, which is sufficient for a bomb. And that is an existential threat, not just for Israel, not just for Saudi Arabia, but for all American allies in the region, and also because of the range of the Iranian missiles to our European NATO allies as well.
Ariel, we'll leave it there. It's always a pleasure. Thanks for making time to chat with us. Ariel Cohen, Senior Fellow at the Atlantic Council, helping us understand the latest developments in the Mideast in both Iran and Saudi Arabia.
This is the Bloomberg Daybreak Asia podcast, bringing you the stories making news and moving markets in the Asia Pacific. Visit the Bloomberg Podcast channel on YouTube to get more episodes of this and other shows from Bloomberg. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen. And always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.